Good morning, everybody. Welcome to the latest edition of Talking Ball. It's the 26th of September. I'm Joe, joined by Jamie and Steve. Good morning, gentlemen. How are you?
Very well, thanks, mate.
Good,
Yeah,
good.
good, thanks. All
How are
good.
you?
Yeah, all right, thanks. Pretty anxious start to the markets again today by the looks of things. So it looks like we're in for another difficult week, to say the least. So
Yeah.
I think let's get stuck into the latest headlines and see what's moving markets over the last 48 hours and try and get a read on what to expect for the rest of the week and try and make sense of some of this volatility. So in terms of the latest headlines, on Friday we had the UK government with a mini budget and therefore a bit of a gamble on tax. The new UK Chancellor Kwasi Kwarteng announced his fiscal statement in the House of Commons with even more aggressive tax cuts than expected. As expected, the national insurance increases were reversed from November, and the planned corporate tax increases for next year were cancelled. In addition, there will also be income tax cuts from next April. The government expects that the energy guarantee scheme will cost around 60 billion over the next 6 months, and the overall government borrowing requirement will increase substantially for the next 3 years. The 2022-23 requirement is still set to increase by 72 billion to over 160 billion overall, with the deficit likely to remain above 100 billion for the following few years. So some pretty significant stuff there by the UK government. As a result of all of this, the UK bond yields increased sharply, with the 5-year yield close to 4%, and markets also expect the Bank of England will have to raise rates more aggressively. The lack of OBR data on borrowing reinforced market fears, and there will be increased speculation over an emergency Bank of England rate hike. As a result of that, the sterling sterling against a number of pairs crashed, with sterling USD hit record lows. Overall confidence in the UK and sterling outlook deteriorated sharply, with heavy selling seen in sterling on Friday, and that has continued again this morning. The UK currency plunged to a 37-year low around 0.850 against the dollar, while the euro surged to a fresh 20-month high above 0.8900. Sterling then crashed in Asia. So Sunday night, with sterling posting a new record low below the low that we talked about in 1985. I don't actually have any prices going back beyond that on the charts to reference for support. So pretty significant stuff. And also the euro against sterling also posted a 2-year high above 92.00 before a limited correction. In terms of the PMI data in the Eurozone, that was pretty mixed. The manufacturing index retreated to a 27-month low of 48.5 to 49.6 and slightly below forecasts, while the service index retreated to a 19-month low. The US economic numbers showed some resilience. The US PMI manufacturing index edged to a 2-month high of 51.8 from a previous reading of 51.5, which was slightly above the consensus forecast of 51.1. The US dollar continues to surge as risk appetite slides. The global equities were also subject to further sharp selling on Friday, with fears over global recession and aggressive Federal Reserve action to control inflation. The dollar surged to a fresh 20-year high as defensive demand returned. Over the weekend, we had the Italian general election, and the exit polls from that confirmed that the Brothers of Italy party will be the largest party with over 25% of the vote, and there are strong expectations of a right-wing coalition led by Meloni. In terms of euro positioning, if we look at the CFTC data that posted over the weekend, that recorded a sharp reversal in investors moving to a net long position of over 33,000 contracts from a previous number of 12,000 shorts previously, increasing the scope for position liquidation. So that suggests there might be some short covering going on in the euro in the short term. A lot to go through on the news there, so let's try and break it down with a more visual representation of what's happening on the charts. Steve, do you want to kick us off today with Bitcoin before we get into the panic-stricken FX and index markets?
Yeah, I feel like I'm missing out a little bit, Joe, just by not.
Do you want to have a go at one of them?
There's one. I mean, obviously the cable I really like. But yeah, I'll let you enjoy the moment, because I might have my moment in the next few days with cryptocurrencies looking like they're on the verge of following the indices and potentially gold lower. We've been talking about this for a while now. This is the weekly chart. This is the level of support that we've got. This level of support takes us between 17,600 and the 20,000 level, and we've been sitting below that 20,000 level. In fact, we didn't get above it last week, so that's significant. Although the range wasn't as big as it normally is in cryptocurrency, we've got down to 18,157. We're only 600 points away from that at the moment. So cryptocurrency really under pressure, and just everywhere I look, it sort of like looks to be breaking down. And sort of like, yeah, we got minor supports below. This is going to be a bit of a long burn, this this sell-off, but potentially the next targets in my eyes would be 12,000 and 8,000, 8,500 level of support, which is from way back when we first started annotating and looking at the cryptocurrencies. Now, the one bright spark among it is XRP. Obviously, there's a lot going on in the States with regards to the legal case of the SEC talking about whether this is security or not. It did break above a, we could call it a trend line, because we got this first point, second point, and almost a third point here. And if we did sort of like want to bring that third point into it to say this is a proper trend line, then we take it down to there. I always like to leave it at the highest point, because that gives us an idea of where potentially the next resistance would be anyway. So that broke last week, and it broke quite comprehensively. Potentially we could still have a retest, and I think this retest could happen if we do see a Bitcoin breaking lower. But the actual bottoming formation in XRP for me is really positive. On a short-term chart, or sorry, on the daily chart even, not so much short term as the others we look at. We did highlight this inverse head and shoulders formation bottom pattern. Had a measured move target of 58. Didn't quite get there, but got close. Got up to 56. So hit the goalpost as far as the absolute technicals is concerned, but it did get up and basically test the previous support, which should now be resistance, which comes in at 55. So that was a decent test. And as you see, we're returning from here. So potentially a move back to retest the breakout before we potentially move higher again. So XRP for me is the one I'd rather be in. Crypto or Bitcoin and Ethereum are really under pressure. You can see this head and shoulders formation which is formed in Ethereum. It's not the see, I would bring it maybe more down to here, even probably. No, that is the left shoulder. So yeah, we're sort of trading around where the neckline is. It's downward sloping, so these are always a lot more confusing and difficult to trade in terms of the actual pattern itself, the head and shoulders pattern. But yeah, that still looks pretty bearish. Around about the 880 level is the would be the next real major support, anywhere between 1,000 and 880 in Ethereum. On the commodity side of things, obviously gold has been front and center as well because of the dollar strength, and we saw a lovely breakdown. We're still, if we take a look at the well, take a look at the weekly chart, because we've got this level of support, and quite clearly we have, if we really sort of drill down to where I would put the support line, if I was trying to be a bit more precise, for this double top formation, it would be around about this band of support, anywhere between 1670 and 1690 now. So for me, that is now resistance. So any move to there, I would be looking to be fading any rallies up until that level. If we manage to climb above $1,700, then there could be a bit of a higher correction then. So that would concern me. But from a trading perspective, I'd be looking to sell into rallies anywhere up at these levels. Obviously, we had the breakdown last week. We had a really decent bearish candle. And the next levels of support that we have from a Fibonacci perspective, 1560, from a psychological perspective, maybe 1600 to 1610 was a one measured move target we had. Can't remember which now. But the big one for me would be a move back down to 1440, which would be revisiting prices we haven't seen since November 2019 and March 2020. So that would be that would sort of like be significant. We'd probably see a lot more strength of the dollar, which would sort of naturally assist with this move downwards. So gold, yeah, they're definitely on the back foot. Long term, I'm still positive on gold, but we're talking about over the next few years, so really not relevant in the timeframes we're looking at. Silver, where's the levels in silver? We've broken down through the support in silver, which was all the way up at 21.50. We retested that, got up to just below the $21 level, and have moved further lower again. And last week's candle was a bearish, almost a bearish engulfing candle, not quite, but it's had follow through this morning. So next level of support in silver, 17.55, and the major levels all the way down at 11.70. So a long way off yet. And crude oil continues the move lower. That has no real signs of slowing. We've got this this ABC correction, which has played out already. Potentially, we could have a deeper correction. Maybe we could maybe even call this a double top, 126 and 121. It's about $5 away. It's not ideal, but it still gives that sort of formation, a break of the neckline, and projecting lower. We should at least get to around about the $67 area, which it comes in with the support that we get between $61.70 and $67, this band of support that we was previously resistance back in April and 19 and Jan 20, and then acted as another resistance in March last year, and then support in August last year, and again in November last year. So these are the sort of levels that wouldn't surprise me that we get down to anywhere between the $62 and the $68 level in WTI Brent crude. Similarly, Brent crude, $65 all the way up to $70. So nice big ranges to attack. And yeah, it seems to be sort of like heading that way. Obviously, the dollar strength impacting on the crude oil as well. So further dollar strength would lend assistance to this, but there's obviously other things going on which affect crude oil. We've got the cold winter coming up globally, and we've got the issues going on with Russia at the moment with the supply, affecting the supply of crude oil and obviously natural gas. Natural gas are under pressure. Had a nice breakdown last week, managed to catch some return on Friday's gun-to-head trade. We'll show you that in a minute. And yeah, overall, it looks very, very similar. Potential for a double top, but this would require a break of 535. And for me, that is where I would sort of start to look to buy any dips around there initially, because we will have support stemming back from October 21 and the support from the swing low in July this year. So I don't think this mess with the energy commodities is over yet. So I think we'll have another revisit down here. This could be potential for dip buying opportunity, but we're still quite a way off, as you can see, over a dollar and a half away. Yeah, that's covers it from the commodity side of things. If I'm allowed, the only formation I know Joe will pick up on this because we talked about it last week is the weekly formation in sterling dollar. This double top formation that we talked about, the measured move target. I've had this sitting on my chart for a couple of weeks now, of 85. Ouch.
Wow.
I mean, we said about this last week as well. We expected a break or a test of this 105.45 level, and naturally, what happens around those levels, you get a break, you get a push through it, a really aggressive and fast move through it, where stops get triggered, panic stations, and we seem to see that. Was it overnight, Joe?
Yeah, there was a big old
yeah.
shock overnight on that with a big
Yeah.
move to the downside.
Yeah, I'll let you take the reins on the FX there.
Yeah, thanks. I mean, one thing we haven't mentioned in the news is obviously the threats from Putin last week as well about him mobilizing more troops and sort of threatening more nuclear action potentially. And also we had, I don't know if you saw it over the weekend, it was trending that the Chinese President Xi Jinping was under house arrest. There's not been any sort of anything formal coming out, but there was a lot of tweets going around about that. So even more threat of destabilization in in China and what's going on with Russia. So it is pretty scary out there at the minute. And that's separate obviously from what we're seeing on the currency side of things. So I mean, let's just start off with the dollar index that smashed through resistance levels there that we had on the chart, multiple levels. So I'm going to have to clean this chart up because a lot of these now really aren't too relevant. But we made new highs at 114.55 on an intraday basis. So we really saw a big push to the upside on the open of the FX markets overnight before a bit of a retreat. We have to look back on the monthly chart really to see when these levels were last relevant, going back to here 2001. We've got another resistance we've highlighted at 116.76, and above that, the previous highs from July 2001 at 121.02. We did see higher levels. We have seen higher levels previously back in 1985 on the dollar index when it was at 164.80. So, if we can get above these resistance levels, if we start targeting these, then the real only reference we have is this 1985 level, which would be pretty scary, right? If we saw the dollar up at that level. But let's go back to cable, as Steve mentioned. He talked about this big double top. I need to clear some of the lines up on this chart. It's a bit of a mess, but I think Steve highlighted it pretty nicely there, that double top formation that we've got on this long-term chart. So the two tops here, let's get rid of one of those arrows. We've broken down, and his measured move target was down at 85. But if we look at these lows from 1985, we've rallied pretty much bang into those. And in fact had a little bit of a look below it before rallying on the intraday charts. But again, pretty scary stuff really. Maybe that is going to be defended. If we look at the candle that we're posting so far on the session, if that turns green, then maybe we're going to see a bit of a reversal in cable in the very short term. But if you're looking for a stop loss, you've got to put it below the low that we posted this morning, and that gives you a pretty wide risk range. So from a risk reward perspective, I don't know if it's going to be worthwhile chasing unless you've got visions of a massive reversal from here, but I'm not sure that's the case.
Well,
So
the only potential for that, Joe, is an emergency rate hike in interim, sort of like, after last week's poor choice of 50 basis points.
yeah,
Maybe you could get that intermeeting emergency rate hike. I mean, something like hitting an all-time low could prompt that.
yeah,
So yeah, I mean, that's the only thing I'm sort of. That's the only thing in my head. I'm looking at that, thinking great reaction, almost a gun to head trade idea for the week. Putting your stop below what the new low is, and going for a sort of bit of a recovery. If we do get another rate hike, then we could recapture huge gains.
yeah, quite
Or we could
possibly.
capture huge gains. We could recapture a lot of ground.
Yeah, maybe. We'll have to wait and see. But either way, it looks pretty horrible. But yeah, fortune could favour the brave there if you do have a stab at going long.
In my
All
contrarian head, Joe, that doesn't look horrible. That looks fantastic
right.
because I'm
Well,
sort
there's
of
a
like
few
thinking,
more.
yeah, go
There's a
on then.
few more of these candles. Don't worry.
I saw the euro sterling.
So this is sterling, sorry, Aussie dollars. Just to focus quickly on some of the dollar ones. So we saw a breakdown there of 66.81, and that's continued to move to the downside. We're fast approaching a 61.8% fib level. So maybe we are going to see a confluence of levels across multiple charts that are, coming into very key levels. So 64.61 on Aussie US dollar. If we take a look at Euro US dollar, another big spike down there. We've tagged this 95.95 level, which was the lowest price reached all the way back here on the left hand side. Well, not at the lowest price, but a key level back from 2001. So that seems to have been defended. So again, maybe as we saw the CFTC data, there was a number of long positions now established in that contract. So we could see some short covering there potentially. So maybe we have capitulated enough in the short term for this to be now a buying opportunity. Let's have a look at what we've seen sterling versus the US dollar. So look at dollar yen. That still remains stubbornly high, up at 145. Their intervention that we saw last week hasn't really done anything at this moment in time. So maybe they'll have to be even more aggressive than they've already been. So let's go back to the sterling pairs then. So sterling Oz, big breakdown there, huge candle posted already. This is a weekly chart, so you would expect to see maybe a range like that on a monthly chart, but this is already happened just today. So really substantial moves seem to be reversing quite aggressively off of those lows. So maybe a short-term opportunity to try and buy into that. Maybe I feel mad saying that, but markets tend to bottom out on capitulation, and maybe that's what we've seen here on pound against a number of currencies. So if you are brave, maybe you could capture a bit of ground there on some of these sterling pairs. This is sterling Canadian dollar. Big break through this support that we had at 148.33. Again, well off of the lows of the session. We tagged 140.56. Is this enough capitulation now for us to see a bit of a reversal in this in the short term? Sterling Swiss, similar situation, big reversal. Sterling Yen, wow, look at that one. So we completed what appears to be maybe a triple top on this, broken down through this support at 155.59. Big reversal taking place already. If we can turn this candle green today, then I think we've seen maybe enough capitulation for a bit of a rally on these. What do you reckon, Steve?
Yeah, I'm all in on that, mate, because they're, like you say, these sort of capitulations happen when there's not many participants in the market. Sometimes over the Sunday night session, when FX currencies obviously start trading Sunday night, and so you can get these because the major banks haven't sort of set themselves up ready for the next week, and so there's opportunity there to sort of flush out a load of stops that could be sitting at really decent levels. So I think that's what's happened. Yeah, if I'm putting my serious trading head on, I'd like to see another retest of these lows, and then potentially that could be the. But I suppose you've got to just pick the currency. Going sterling against dollar, I'd rather go euro sterling for this play, because I think the Europe has similar sort of issues to the UK, so they're all lagging behind the
From a
Fed
risk
at the
reward
moment.
perspective, the range wasn't as big on that, so you could have a bit more of a better stop on that, I think.
Well,
Maybe.
I'm thinking about euro sterling rather
Oh,
than
euro
sort of
sterling, sorry.
yeah, because euro sterling had that same sort of flush out because it
Yeah,
just naturally does. So I'm sort of thinking less chance for euro sterling to get up to those previous, well, the spike overnight.
yeah. Pretty substantial stuff there. Came very close to that resistance there from
Yeah, I
September
saw that.
2020 at
Yeah,
92.91.
it's amazing. You'd think that technicals actually worked when you see things like that, Joe.
Yeah, my dad mentioned to me about this because he got some euros and he said, "Oh, should I change them here?" I said, "Oh, I think it's going to 93." I didn't think it'd go there within a matter of hours, but it has. Hopefully, had a limit order in there. Um, okay, let's move on to some of the indices. I don't think we're seeing the sort of capitulation here that we need to see in order to suggest that we're at a bottom with the indices yet, but this has turned around quite nicely as well. It was heavily in the red early on. This is the ASX 200. It's come up just shy of these previous swing lows from June at 64.05. So turning around there a little bit. We're seeing a similar situation with the Euro Stocks 50. That broke down very substantially on Friday. Big red candle. We're now about to see a retest of the underside of this broken level coming in around about 33.85. So it'd be interesting to see if the sellers are still here and if we're going to see the price continue to move to the downside. Based on that break, you would expect that we would, but no, I don't think that's the sort of capitulation. It's not the same sort of capitulation that we've seen in the currency markets for me. So I don't think we're quite at a bottom yet with these markets. DAX, that broke down through this 12,431 level. It's come up shy of the 50% fib level at 12,130. So maybe some support going to start to form there. Resistance above, so not huge amount of upside potential in this based on the technical levels, but if this is capitulation that we've seen on Friday, then maybe we could see a bit of a rally to the upside. Looking at the US markets, they are lagging a bit. only just above flat on the session. The S&P 500 just come up shy of this 3640 level. Seems to be acting as a decent level of support. Long way to go really on the session before we can start to get too excited about that. But maybe there is some potential there for a rally to the upside. FTSE 100 up by 0.5%. Not really a great market. It's impacted so heavily by these currencies. You would expect the domestic market in the UK to be on its knees, really, given what we're seeing with the currency, but that's not the case. It's holding up quite well at 69.71. If we look at the Dow Jones, that broke down through support on Friday below this 29,653 level and the 38.2% fib level. Seeing a bit of a retest at the moment of that. We'll need to wait and see if the bulls have got the appetite to push that higher, or whether or not they're just going to be fading into a retest of this level before a further decline towards this 50% fib level at 27,578. One market we don't spend too much time looking at, but I think is quite a relevant one, is the Euro Stoxx 600. So we look at the Euro Stoxx 50, but the 600 obviously is a much broader index of Europe, focusing on 600 stocks rather than just 50. That saw a big breakdown last week below that 400 level, fast approaching a 50% fib level, still trading in a bearish channel. We've got a big band of support here that we've highlighted, and ultimately expect prices to get towards this level. But maybe we are seeing a little bit of a fight back happen a bit earlier than that. From here, I'd be targeting a retest of this broken level. So from a risk reward perspective on this today, that actually looks quite reasonable, but obviously the overall trend remains very bearish, and that is a highly speculative trade. That's it for me. I feel like I've been talking forever on these because there is quite a lot to talk about. So Jamie, do you want to take the stocks for us?
Yeah, I will do. Thank you, Joe. Take a look to start with. Sorry, that's my fault. I'm clicking buttons. At our biggest loser and gainer of the day. Starting off with our biggest loser of Friday's trading, and that is this AORT. 28% down on the day. This is Artivion. Take a look at what's happened with this. It stopped a trial designed to determine whether patients with an Onyx mechanical aortic valve can be maintained safely, as recommended by an independent monitoring board. Down 28% on the day. Our biggest gain, we've got this GSUN, Golden Sun Education Group Limited, up 92%. Couldn't find any reason why on the TradingView news there, but yeah, spiked up really high right into this previous wick over on 19th of August before finding resistance and selling off. So at one point this was actually up, if we get up our percentage to close to 250%, but did sell off pretty aggressively after we did get that spike. So yeah, 92%, not a bad day overall. Looking at the stock heat map, I wanted to firstly take a look at the weekly percentage moves, and as you can see, not a good looking board here, all in dark red pretty much. A couple of exceptions, but overall the kind of main ones we look at: Tesla 8% down, we'll jump in and look at that in a sec. Amazon down 7%, Google and Microsoft 2.5%, 3.5%. It's not looking too good, to be completely honest. Checking out the daily chart, you can see Tesla had probably one of the worst moves of Friday, down 4.5%. But energy really struggled as well. Just not looking good at all. We'll dive into a few of these names, see what we can find. Want to check out Novavax again. This another 6% down. Seems to be every other day we've got this now. We'll have a look at a few weekly charts, see what the closes look like. But you can see here we had this kind of blue band of potential support. Just broke through that, closing right at the low of the week. Volume picking up a bit from the previous weeks, but not above the 20 period average at the moment, but certainly nothing technically that shows this is forming any kind of bottom right now, so not looking too good there. We've got Plug Power here. I remember we spoke about this a few weeks ago. I think one of our viewers wanted us to check it out, and we spotted this downward trending resistance here, ran right into that. We kind of consolidated around there, which also actually coincided with this horizontal resistance level. So this was quite a nice little confluence area for a bit of selling action potentially, and we did get that, and it's followed through last week with the rest of the market down 5.5% on Friday's session, and this is now starting to move towards our target level, which I believe is a gap fill. Yeah, a gap fill down there. So yeah, plug down 5.5%, looking pretty nasty. A nice little head and shoulders on the short term there playing out as well. You can see the left shoulder there, the head, and then this right shoulder all playing out at the resistance. So possibly quite a nice level to get in there. Let's have a look at Tesla. 3 really bad trading days to finish the week. Actually, I think probably being weaker than the majority of the market after looking like it was holding up quite nicely. We're back at support now at this previous level where price hit before rebounding up. So I'd expect potentially some buying support to be seen here. But with how the general market's looking, I think a move lower will potentially be coming. So let's see, maybe we'll get something like this, a bit of a bounce. And then perhaps a bit of a retest consolidation before breaking down towards this blue line. That's kind of what I'd be looking for this week. Costco, I want to check this out because we are back at our long-term trend line support. If I zoom this out, that's not gone so great. It's kind of come off the level I had. There we go. That's a little bit better. So yeah, we're still a little bit away from it at the moment actually, but coming back to it, and certainly a lower high being posted on the weekly chart, and the volume really starting to pick up on the selling as well. So I'd expect to move towards this. With how long it will take to get there, possibly be around this 442 level. Depends how aggressively we move downwards, but I'd certainly expect a retest of that and possibly a break in the next month or so. Check out Ford, finished the week pretty bad. You can see again volume really high, not looking healthy at all. AMD breaking through this really key level on the weekly chart, moving towards the 61.8 fib of the, how far is this? This is the lows from all the way back in 2015, so pretty significant levels we're seeing there. Not really any technical support in terms of price action, but that will be the next level where perhaps buyers will step in. But yeah, this looks like it's moving a fair bit lower. Nike, similar story. I think, yeah, we're closing on the weekly chart below this previous swing low, volume picking up, not looking great at all. We'll jump into a couple more. What's Apple saying? I haven't looked at that today. Apple, not too bad, I think, considering how other stocks are playing out. What can we really say about this? We're nearly at the 61.8 fib here, where I'd expect some buying, but you can see the volume, especially on this day here, a lot of volume on the 16th. And let's look at that on a weekly chart. You can see 2 really big red volume weeks there, the last 2 weeks. So that's, again, nothing's going to be looking great, but I suppose that's not looking as bad as some are. Where should we finish? Let's finish on something that was up for Friday's session. There's not many to choose from. What's GameStop doing? We haven't looked at that for ages. Yeah, there we go. Look, a bit of a potential. I say potential. It's a long way off being a double bottom, but you can see prices stalled at this kind of 24 level where it found some support previously. That's 4-hour charts. We can zoom out of this. So yeah, we're getting a bit of buying at this level down here. A pretty key resistance as well. If we draw a horizontal, you can see we've got a lot of wicks off that on the upside, and then it's found resistance twice on the downside. So I'd expect some more selling if we do get back up to 29.25. Whether we'd even get there with the current market climate is well, we'll see. I'd expect that I think we were speaking about this the other day. Certainly I was speaking with Joe and Taff, our other analyst, about it, that potentially the indices will see a bit of a rip up over the next couple of weeks before the next leg down. But we'll see how that develops. I think it's certainly something that could play out on low volume before we get that capitulation, which, like Joe said, I don't think we've necessarily seen yet on the stocks and indices. But we'll see how the week plays out. I'll leave it on the stocks there.
Thank you, Jamie. Okay, so let's move on to the gun to the head trade. So this is where the 3 of us pick trade ideas live on the video. Each of the ideas must have stops and targets. They're all placed at market. It's just a bit of fun. We're just hoping to see if we can make some returns between now and 9 p.m. UK time when the trades are expired. If anybody wants to check out our history of these ideas, you can do so on our TradingView profile. They're there for all to see. That's at signal_center, and we post them up in real time. So trades that that we did last week, I went long of the DAX. It was into a big support level. It was highly speculative, very much going against the trend, and it didn't work out as a result of that. We saw a breakdown to new lows, and I was stopped out. Jamie took the opposite side, going with the trend, which is probably a smarter move. And as a result, he actually hit target on the CAC for a 2.06R return. And that happened pretty quickly after he posted the idea. So well done to you, Jamie.
Thank you.
Steve was selling natural gas, highlighted a bearish pennant, and he absolutely nailed that as well. Come up just shy of the target, but even with that, he had a pretty aggressive risk reward ratio on that. So he managed to nail a 3.96R return on natural gas. So well done to you, Steve. In terms of where that puts us overall, we are logging all of these on a spreadsheet. It's based on a hypothetical balance of £1,000, risking 1% per trade. And the overall balance is currently at 2,583. So very close to our previous all-time high, which was reached back in 2020 in October. So overall, still looking pretty decent. So well done to you two on Friday. Now we've got a real challenge. We've got to go again, find something amid all this panic and volatility that we've started off the week with. Anything that's standing out to you guys?
Well, I'm going to go for one that's a bit unusual, shall we say. It's like XRP against Bitcoin. I think we've put a bottom in place, and we've had a real sort of break higher last week. I think this is going to continue, and so you can, whether you can play. I think this is on Binance.
Yeah, you can trade it. It's a spread between the two. That's
yeah.
pretty well traded, I imagine.
Yeah, I mean, if we look at it, potentially we've got this like bullish flag formation. Just quickly draw it, so it's something to understand. That's the sort of formation, but we're getting this nice line of support around about the, I'll call it 2,471 level. I know it's like 0.00000, but so we'll just call it what it is. In the trade idea, I'll put the exact prices in there, which I'm targeting. But on an hourly chart, we've seen a bit of indecision in the last hour, and we saw a little bit of a spike up over this hour in now, between 8 o'clock and 9 o'clock. Yeah, so the one we're in now just had a little bit of a spike up. I mean, it does have generally quite big spikes, but without wasting any more time, let's get in at this decent level. I can have the stop quite close. I can have the stop just there and target a move back up to up here, which gives us a nice sort of, let's call it 60 tick stop and 180 target. So a nice little 3-to-1 risk reward trade idea on this. Yeah, why not? Why can't it do it in a day? Let's see.
Good luck. Jamie, what are you thinking?
I'm actually having a look at the indices today, and I've had a success before actually fading these aggressive moves downward. And I'll start off on the daily chart for the Dow here, and you can see the RSI is in this oversold territory here, and we haven't had that. Was I looking at, I don't know which to trade here. I was kind of looking at the Russell actually. I mean, the point I'm making still stands that, look, we've only got into this really oversold, and by that I mean below 30 a few times, and each time we have, if we look at it here, in May we rallied off that, and again we had the rally down here as well, and I just think, you can get some good risk reward off it. We will go with the Russell, I think, see what we can get here. So drilling it down to an hourly chart, we've had a pretty nice hourly candle at the moment, so we can keep, which kind of spreads out the risk reward a bit more than I'd want, but regardless, we'll keep the stop pretty tight, having it just below this candle. So it is quite aggressive and certainly speculative going against the trend, but looking for a move upward from here. What can we really target? Let's bring in some fib levels from this move downwards. So we've got this, I think that was some big news you had a while ago with that self. Can't remember what it was. I think it was J-Pow was speaking. But let's have a look at where the 38.2 fib is. That's what I targeted last time. That worked out okay. We're going to target it again. Gives us a pretty nice risk reward. So Current price is, it's moved up now, that's a shame, 16.85. There we go. You can keep stop, yeah, just below, give it a bit more room now, but just below this this candle here at 16.61. There we are, and targeting 38 to fib, which will be at 17.59. And yeah, I mean, against trend, speculative, but keep stop in place, gives us 3.08 risk reward if we do get a bit of a rally today after a very extended move downwards. And like I say, the key thing that I'm looking at here is this RSI, which was oversold and is moving back into not oversold territory. So yeah, we'll see how that plays out buying the Russell 2000 today.
Okay, good luck. I similarly am looking at indices and have eyed the CAC 40 today, the CAC 40 for us from Essex. Let's have a look. This is the intraday chart, so the hourly. We can see it's been trading in a pretty well-respected bearish channel. We've seen multiple touch points along the lower end, but we've seen a big green candle today. Also looking at the RSI, we can see some bullish divergence. So we were making new lows on the price, but the RSI was making a sequence of higher lows. So maybe some evidence of a bounce coming. What really interested me most, though, was on the daily chart. We can see here that it's into a major level of support. So these previous lows from March 22, we came very close again in July, and we've touched it again in September, and posting in the early stages of potential hammer candle. It's very early in the session to be calling it that, but just going by how it looks at the moment on the daily chart, there is potential there for a turnaround. So risk reward on this isn't great. I'm sort of targeting a move into these highs here. Ideally, I'd be looking for a move to the upper end of the channel, but it doesn't give me enough risk reward if I'm putting a stop loss below the lows that we've posted this morning. So this is the trade I've gone with. It's posted up on TradingView, buying at 58.16, stop loss 57.25, target 60.22, risk reward 2.25. So let's see how that plays out between now and 9 o'clock this evening.
Nice, good luck.
Okay, so there's three trades. In terms of what we can expect from the day ahead, let's take a look at the calendar. At 9 o'clock, so in the next 17 minutes, we've got the German IFO index number. Then at 2 o'clock UK time, we've got the ECB President Christine Lagarde with a testimony, and I'm sure she'll be quizzed on lots of other things around monetary policy in the Eurozone. And later this week, or tomorrow, we've got the US Consumer Confidence number that is due out. In terms of earnings and economic events, I think earnings season is about to start as well. I don't know if anybody's got any confirmation of that, but that could be something that may help markets as well if they come in better than expected. I imagine the expectations on a lot of these companies is pretty low at the minute, given what's happening in the backdrop of the market. So we'll keep an eye out for that over the next few days. Anything to add, gents?
No, all good.
No,
okay.
Good from me.
Despite there being a lot to talk about, we seem to wrap that up quite nicely within 45 minutes. So hopefully anybody that watched enjoyed that and it was useful. And we will be back tomorrow morning with more of the same.
Yeah, cheers.
Have a good day. Bye-bye.